Welcome boys to the full breakdown of the trade that I took today on EUR USD using the mech variation of the tap and barrel model. As the name implies, this model is fully mechanical, requires zero discretion at all. From the bias to the entry confluences, everything is fully mechanical, super simple, and I'm going to talk you through exactly how I took this trade today. Now, the first thing we need to do coming into market open is to determine our bias. Where do we think price is going to go? Is it going to move higher or is it going to move lower? Now, the way that we like to do this on this full mech version of the model is the simplest way you probably can do it is to hop onto the 4-hour time frame right here and mark out the session open right here and then look for the most recent break of structure to a fractal. Now, what that means, what is a break of structure? It's a candle close above a high or below a low. So we look for the most recent 4-hour fractal right here. Was there a break of structure? So a close below? No, there wasn't. Look for this one. Was there a break of structure? No. This one, no. This one, yes, there was. Was it to the upside or the downside? It was to the upside, so we're bullish. It's that simple. With the bias, don't overcomplicate it. Don't try and look for trends or any of that stuff. Just look for the most recent break of structure to the 4-hour fractal, and that will give you a good confirmation of where price is going to go. So now that we know we're bullish for the day, we need to be marking out the previous session low in line with the bias. So I like to hop on the 5-minute time frame, and the previous session right here between midnight UK time and 8 o'clock UK time is Asia session. Because we're coming into London session, we're looking for the previous session, which is Asia session, looking for the lows right here. We look for the lowest point to be swept. So we draw a little line across from here and make sure that this is the actual lowest point in the session. Don't get confused with these ones. We want the actual lowest point in the session. Then we're just going to wait. You're just going to sit on your hands and wait, because what we're looking for is this kind of move up. We've got the general bias on the 4-hour. We're looking for a sweep of this level and then a continuation on in this direction. So we literally just need to wait on the 5-minute time frame. Just wait until we get that sweep. Now this can happen later on into the session, as long as it's not between 12:30. That's the latest fill before we go into New York session. We're waiting for this sweep. And you can see right here, we get the sweep. As soon as we've got the sweep, we're looking for the first bullish candle to initiate the fake out. So the second confluence after the sweep is the fake out confluence. Now what this does is it's a fake move in the direction of our bias. So we're bullish. It's a fake move in the direction of the bias, followed by an actual move down a little bit further. So what this is trying to do is, as soon as we get this sweep, there will be retail traders that are getting in right here, trying to predict this reversal instantly on like the 1 minute or the 30-second time frame. What we're trying to do is wait for these guys to get stopped out, because a lot of the time, and we've done this through the back testing, is as soon as we have the sweep, we'll have this little move in this direction and loads of people will get in. They get really gassed, stop loss just under here, and then price will come down, actually sweep them out, and then want to go in the actual direction. So this is what we're trying to avoid getting in too early, is waiting for this fake out. So the fake out, the way we do this is on the 5-minute time frame, wait for the first bullish candle or the first candle in the direction of the bias to form. And as soon as we've done that, we're going to use the fib tool right here and mark it from the highest point in the previous session and the current session combined. So we look for the highest point. The highest point is in the current session, so that's completely fine. We draw the fib tool all the way down right here. Now this 0.079 is this magical fake out zone. So I like to draw a box here. You can just keep it on the fib if you want, but I like to draw the box. And now we are waiting for this tap into this zone. So because we've had this move down, this move out, a lot of people will get in too early, and we're looking for this tap into this zone to stop these people out, to consider it a valid fake out. So we literally just wait for the next candle to print. And you can see this hasn't quite tapped the zone, I don't think. If we zoom in, yeah, this hasn't quite tapped it, so this is not a valid fake out yet. We need to wait for the next one. And right there. So now this is a valid fake out, and we can move on to the next part of the model. So as soon as we've had the fake out, we're now looking for the next step in the model, which is a break of structure to a fractal. So as soon as we've had this sweep and this fake out, now we're looking for an actual confirmation that we are going to move higher. We don't just want to enter off the fake out. We want to wait for an actual confirmation. And the way that we do this is we look for a break of structure to a fractal. So exactly the same on the 4-hour. We're going to do this on the 5-minute this time. We're marking out the most recent fractal and we're looking for a break of structure above it. So we're just going to wait until we get a break of structure. And right here, we get a break of structure. So then we move back one candle right here. So as soon as we've got the break of structure, we're ready to move on to the next part of the model, which is using the fib tool, that same tool that we used at the start, to draw out the zone where we want to set our limit order. Now with this model, we like to use limit orders because it's a lot better for scalability and it gives you a much more precise entry than if you market executed. So for this one, we're going to be using limit orders. And the way we decide where are we going to put the limit is by using the fib tool once again. So the way that we actually get the entry is by drawing the fib tool from the lowest point of the sweep all the way up to the highest point after the break of structure. Now this is going to give you what's called the Goldilocks zone, which is this zone between the 0.5 and the 0.618. Now the reason we're waiting for this is we could just enter off of the break of structure right here and your entry would be here, or you could wait for a retrace, which often happens, into this zone of discount right here, and the 0.618 is the area that I like to have this on because I found the best results. And as soon as you get this retrace, we're going to have this limit order resting here, and you can continue up in this direction and get the trade. So you can have your limit order anywhere between the 0.5 and the 0.618. A few guys like to have it on the 0.5 because it gives you quite a lot more entries. There'll be time that price comes down, taps the 0.5 and then moves in your direction. But there will also be times where it comes down, taps the 0.618 and continues on in your direction. Now, if you had it on the 0.618 right here, and we'll go over where to put your actual stop loss and everything in just a second. If you had it right here on the 0.618 and you targeted, let's say 3R, which is what we're going to be talking about in just a sec, or if you entered on the 0.5 right here, the actual distance that it has to cover is very different to be hitting a 3R. There will be times where it only comes to here and then reverses, and the guys that had it on the 0.5 wouldn't be getting that kind of entry. So that's why we like to wait for anywhere between here, but I like to wait for the 0.618 right here. So the final part of the model is to set a limit order on the 0.618 or anywhere between. You put your stop loss at the 1.025 mark right here. This gives a little bit of breathing room if it wants to come down and re-sweep this level. And then we set and forget with a fixed 3R. We don't move to break even. We don't manage the trade, we don't take partials, we don't do any of that stuff. We set and forget and wait for price to hit either take profit or stop loss. We've done the back testing and we found that the times that you move it to break even, price could come down, tap break even and then rock it. And there's times if you want to take partials and all that stuff, it doesn't give you the full amount of profit. So this is why we set and forget. And this is all I did for this trade. I fully waited, we got tapped in on the next candle. So it's quite important to be kind of on it with these limits. And this was the entry and then we just waited. And price came up right here. Now, if you were managing your trade and it came so close to take profit and you, I don't know, maybe you took profit here at the top of this fair value gap or some discretionary shit and then moved it to break even or moved your stop loss up here, you could have been stopped out and then prevented the actual full run. So this is why we like to set and forget, because we've done the data, we've done the back testing, and it proves that it is better in the long run. So that was the full breakdown of this trade. Super, super simple. Once you understand the model, it is so mechanical, so repeatable. The bias is so easy. I've never found a model that the bias is this easy. A lot of the time it's looking for recent trends, looking for order flow, bullish, bearish, all of this stuff. But with the breaker structure of the fractal, super simple. You can't really go wrong. You know, there's a reason it's called the full mech, is because it's fully mechanical. There is zero discretion at all. So yeah, that was it for today. Hope you guys enjoyed it, and I will catch you guys in the next one.